Hey guys, welcome back. Welcome to another playlist video. Here I'm going to go through, a bunch of potential setups that I think, may be profitable in the market. And I just want to, first go through an overview of what I think the broader index is going to do. So I have different versions. I have the bull, I have the bear, and I also have like short-term bull but long-term bear. So I just, kind of want to go through all the scenarios and, just kind of give my thoughts on the market. And as time goes by, we can eliminate the different scenarios, that are possible. And then we can have the most probable count and follow that through. All right, so let's get started with the bear version, right? So this right here, you can see on my chart is the first chart here I have, which is the bear version. This implies that we're in a wave 3 or wave C. So that shouldn't surprise us. We're actually gapping down on a Sunday night because generally a wave 3 and a wave C is generally the most, impulsive move down, the most bearish one. So if at open we do continue selling off, then this chart I have here is honestly the most likely scenario. I would expect us to touch at least 4432, right? So the first level I would expect the bounce would be around 4510, right? But I don't think that level is going to hold. Like if we do indeed play out this bear count, I think 4432 is the next area where we could have a potential bounce. Again, this is an ABC in a bigger ABC, right? Ultimately, I think we go fill that gap lower. So I'm targeting at least below 4,000 if this bear chart does play out. So this is the bear version, right? That's scenario number one. Number two is bearish as well, but here you can see we're actually kind of in a channel as well. I just want to show you the different outlooks and the different things that could take place. And right now you can see that we did bounce off the bottom of this channel. If I zoom in, you can see we exactly bounced off the bottom of this channel. So that's the power of channels. It can tell you when to buy and when to sell. But even in this, right, even though I do assume that we are going higher, it is just short-term bullish. I don't think we will make a new high, right? We're probably going to make a head and shoulders up here, right? Somewhere close to 4745, 4757 in this range is where I'd expect the market to, kind of find a top before it goes down lower. Again, this is again in a bigger ABC. So this is the second scenario. Honestly, this is kind of what I'm leaning towards compared to this, right? Just because, and based on this chart, I've chosen some setups, but here's the thing, that doesn't mean this or this bull version may not play out, right? Right now, I give all three of them equal weightage, right? One thing I'd say is that you can see if I draw this trend line, right? We did break this trend line. So if obviously the bull, it's pretty simple, right? If we break this low at 4572, then this, then this chart would be ruled invalid. Although I would say that it could go as low as, I would just remove the 1-2, right? It could go as low as, this is the line in the sand, right? If you break 4519, then there's no other bull counts in existence, to be very honest. Like this is the line in the sand for the bulls, right? It could, right? Even though this 1-2 that I had drawn on the bull chart, even if we do break this low, I do think the market could find some kind of support. But again, you have to keep in mind, this is a trend line that's held since September, right? It's almost 3.5 months. So breaking this trend line and then expecting the bulls to save it, it does happen, right? You do have those catch saves, but again, I would have to lean towards a more bearish count than a bullish count. Like if we do break this low and then come here, right? It is a possibility. I just wanted to show you 3-4 probabilities that are possible in the market, but the bears are gaining more and more momentum with the rate hikes, coming into the picture, and the Fed predicting almost 3-4 hikes, right? Some saying almost 6. That generally doesn't bode well for the bulls, right? So even if we do break this low, this, right, they could catch save and go back over the trend line to, I'd say almost 5,000. This is where wave 5 would head, right? But I would have to, I would start putting it at a less probability avenue. So anyway, let's go through them again. This is my bear count. In the event of a bear count, we likely have a very, very red day today. We keep selling off, right? Bigger picture, this is what it is. short-term bull is I expect this channel for the market to hold. We probably push higher, right, before we go lower. And again, I discussed the bull count. So the pretty thin line, right? If this low breaks, then the bull count would be that it would need to get saved close to 450, 4530, 4520. That's where bulls would need to step in and push it higher. So that's the bull count. So I just first wanted to go through all three of these charts because I want to ensure that you guys understand the market is in a really, really unstable place. Cumulative volume is terrible. Everything is kind of supporting the bears, but that doesn't mean, right? We've seen the fuckery that's gone in the market. That doesn't mean bulls can't save the market yet, right? So I just wanted to discuss all of it, but it's getting very close to a point that bulls may not be able to save it. So let's discuss the setups, right? Why did I choose these setups? Like I do have more bull setups than bear setups. That's because, as I mentioned, I do think we're short-term bullish and longer-term bearish. So that's kind of why I chose it. And also a lot of the charts personally to me have been indicating, right? A lot of these oversold growth plays have been indicating that they're, kind of due for a bounce. So that's one of the main reasons I actually have a lot more bull setups. And you'll see most of my bull setups are not FANG or semiconductors. All of them definitely have a lot more room to the downside. It's more like growth stocks that I've been getting hammered since last earnings. So the first setup I have is Snap. So let's discuss why I have, Snap as one of the potential setups, right? That's number one. Personally, it's the reason I have Snap is because you can see it's been kind of forming a bullish divergence pattern. So I do expect Snap to, whatever dip it has this week, I do think it's going to move higher. So I think a bullish divergence setup is likely to, kind of play out for Snap. And another reason is you can see that I actually took the log off of my chart, right? And you can see without the log scale, we're exactly on the 0.618 fib level, right? Generally, what do you know about the 0.618 fib level? It is the golden zone, and as a result of which I am expecting about. So bullish divergence, it has a golden fib level. And again, if it goes any lower, it's going to fill this gap. So generally, when a stock is down almost 40% from its earnings, I played earnings split. So that was a good trade, but I don't think this gap is going to fill yet. I do think it will fill, right? But I think it's going to bounce higher, use this fib as support, right? I think today's Monday step is probably the last step before it has a bullish B wave, before it comes down for the C wave. So again, you can put your stop right close to 35 because below this, it's going to start to fill this gap to 28. So I think it's pretty good risk to reward with, a good volume shelf, a good fib level. So that's the reason I have Snap, right? Just by being able to, buy yourself time. And I think you should be, Gucci to go. So the next thing is Roblox. Again, same as Snap, right? I use something similar with regards to Roblox. And here you can see that it also, this is since its IPO. One thing I have to mention is that newer IPOs, Elliot waves are not that useful. You need a lot more price action, but I'm just using simple, trend line channel here. You can see this channel has held since its IPO, which is why you can see that I have 73 to 75, right, as a potential area to buy the dip. So I do feel like today, Tuesday morning flush should be a good dip to buy, at least for a good bounce, right? It may not have to bounce as high as 110 like I have it here, but I feel like at least 84, 90 is still a pretty good risk to reward when you're playing call options, right? It's a 20% move. So that's the reason I have Roblox on the list as well. The next one is Crowd. Again, Crowd is very similar to what we have for Snap and again, another oversold play, right? Crowd is another oversold play. And I do think today's dip, right? Today, Monday morning dip, futures are red. Is you can see this is where the previous wave 4 as well ended, right? That's kind of why I have, I have 165 to 168, right? Wherever it dips, right? I'm trying to just say with 2 months of time, you can start scaling into Crowd. I do think this area will hold. Again, bigger picture, I am bearish, right? I do think it'll make some kind of head and shoulders pattern before it comes down to 105, but I am expecting Crowd to, be able to find some kind of support closer to 167, 165. So that's kind of why I also have, I have Crowd on the watch list. Again, as you can see, the theme is I have 3 oversold plays. All of them are key levels, which is kind of why they made the snap watch. So that doesn't mean they can't, if the future, like I mentioned, when you saw the bear case, right? The first bear case, that doesn't mean none of these plays can break supports, right? They can definitely break supports and keep bleeding. That's why, there's stop levels to, make sure, you have an idea. If it doesn't play out, you have to, be willing to stop out and find out what went wrong and then, improve on it for next time. All right. Number 4 is XBET. Yeah, now we get to the juicy put entries. For this week, I just feel like we've gapped down a lot on the futures, which is why I have not been able to find good stocks to short. But I think EVs, right? Lucid has lockup and XBET and Tesla, they've all just kind of been in the distribution mode, which is why I think that XBET could make a good short. You can see even today, it barely gapped down. Like I just feel like for the past 6 to 8 months, it's just been distributing sideways. But bigger picture, I think this is a ABC, right, guys? And I think XBET was definitely going lower. So you can see I have XBET in the wave 3. And what are the levels? I said you can start scaling in 48 to 47. Personally, I feel like 50, 52 is a good stop level, but I feel like XBET has a good risk to reward to the downside. My targets are 45, 42. But bigger picture, you can see I expect 25 and 20, right? Obviously, that's a longer time frame. 45, 42 is like 3 to 4 weeks. But like if you're someone who doesn't want to trade a lot, I'd say, 4 or 5 months. Excuse me, 4 or 5 months of time, right? That's good enough for this downside to play out. So that's the reason I have XBET. And Tesla is honestly very similar to what I have for XBET. You can see that we have very similar charts, very similar wave 3, and Tesla did, kind of gap down. So when you're entering Tesla, do one of 2 things, right? Either wait for this low to break and then you can play the downside, or, we did gap down. So you have to, understand that this gap above can fill. That's why you can see that I have 150 to 120. Like, this entire area is a good spot to, kind of scale into puts. Obviously, I'm saying 1 month of time, right? Just to be on the safe side. But I do think EVs could sell off this week. So that's kind of the reason why I have Tesla puts on here. And that's in a bigger ABC. Bigger picture, same as XBET, right? I think Tesla comes back down to 540, 600-ish, right? But again, that's on a bigger 4 to 6 month time scale. Again, I can be wrong, right? It's just my opinion. So all right, let's look. Sorry, guys, my charger is just acting weird today, but let's move on to the next one, right? The next one I have is Facebook. We've been on Facebook, right? We played all the way from 350 to 320 a couple of weeks ago. It's still the same chart, right? We've been observing this megaphone pattern. Most people think it's an inverse head and shoulders. I personally do not think so at all, right? But I will show you a short-term bull case, may not be a long-term bull case, right? This is obviously the most bearish case for Facebook, where if the first bear case I showed you in ES mini futures played out, then this chart to 286 is pretty much a given. But the only other thing that I would say for Facebook is that I could see something like this, right? This is an A, this is a B. We move higher, right? We retest that megaphone pattern, or at least we go make this head and shoulders pattern. I could see us move at 344, 345 before it comes to 286. I definitely don't see it making a new all-time high, playing on any kind of inverse head and shoulders. This is the only bull case, which is still a bear case, but it is the short-term bullish. This is the only short-term bullish case that I could see happen for Facebook, right? But again, as I've showed you guys, that depends on how the bigger market as a whole plays out. They're both equally likely, but for now, right, I've put Facebook puts below 321. 321 pretty much, breaks this low. And I do think that if this low breaks, then this chart to 286, starts to gain more probability. So that's what I have for Facebook. Let's see what I have for Walmart, right? Walmart is very similar to Facebook, but in the case that they both made highs like 4 or 5 months ago, like not like the market and not like FANG, where they've made highs in the recent months, right? Walmart, you can see it made its high in November. And ever since then, it's been making lower high, lower high, lower high, lower high, which is why I think that these lower highs result in a divergence, right, to the downside. It generally tells you, right, when a stock keeps making lower highs, it generally tells you that it is not bullish, which is why you can see that I have Walmart puts below 144.38, right? I just wanted to break back down below this wedge. Can you guys see this blue wedge, right? I think it breaks down. If the minute it breaks 140, you can see this long-term bear flag, right? That would take you down all the way to 120. Obviously, Walmart is a boomer stock. It's likely to move really slowly. So if you're buying puts, you need to buy a lot of time and just let it sit there. It's let it play out this lower highs. And when it starts to sell off, I don't think there's anything going to stop it because it has been making a series of lower highs, which is why I have Walmart puts on there, right? And the last but not the least, I have AFRM, right? What do I have for AFRM? Here, AFRM is again another oversold play. From its highs, we definitely shorted it down, and from its highs, it's down almost 70%, right? Which is why, and we also know that AFRM filled this gap, right, guys? So the reason I have AFRM calls is because I think it's gonna bounce off the bottom of this channel. It's filled this gap, and just like Snapchat, Crowd, so I feel like all these stocks, right? They're very similar and from when they've sold off, and all of them look like they've, kind of ready for a reversal, which is why I think that AFRM is another oversold play, which can, catch bids this week. Again, that doesn't mean it can't break support and keep selling off. I just think risk to reward, if you're willing to risk, $2, $3 for $30 gain, I think, when it comes to risk to reward, AFRM's pretty good. All right, guys. Thank you so much. These are my 8 setups for the week that I'm, kind of monitoring. And I'll see you guys next week. It was really nice, talking to you guys.